Thanks for staying with us. Last week, the Central Bank of Nigeria unveiled new minimum capital requirements for banks, pegging the minimum capital base for commercial banks with international authorization at 500 billion. And this is coming days after the Apex Bank urged Nigerian banks to expedite action on the recapitalization of their capital base to strengthen the financial system. Joining us on the show is an economist, Dr. Ayodele Shitu, who will be helping us understand these things. Okay, the guest we have actually is Mr. Oji, who will be helping us dissect this information. Good morning, Mr. Oji.
Good morning, and thanks for having me. How are you guys doing over there?
We're doing great, sir. We're doing great, sir. So I would like to start by asking you how you took the news of the recapitalization of banks by the CBN and what you think is going to do to the Nigerian economy, looking at all the inflation we've been dealing with for so long now, and how you think this is either a step in the right direction or not.
Okay, can you confirm you can hear me clearly?
Yes, I can.
I had a little challenge with my network a few seconds earlier. Can you hear me clearly?
Yes, I can. We can.
All right, okay, so this is a very important discussion in looking at the kind of economy our dear President Tinubu wants to evolve in the next 8 years, according to the APC government. Nigeria is fighting very hard to grow its GDP to about $1 trillion from about $400 billion that we have today. And that kind of dream or ambition requires that we must have a very robust, healthy, well-capitalized banking system. Because in every country in the world, the financial system is closely knitted with the economic system. And that's why once you have a poor financial management or financial crisis, it always gives rise to economic crisis and vice versa. So to drive strong economic growth, we need a very robust banking sector. So this capitalization exercise that the Central Bank under Cardoso wants to implement has been long in coming. I've actually expected that to happen quite a long while ago, looking at the fact that the last major exercise in that direction was in 2004, 2005, under our dear Central Bank Governor Soludo, as it then was. Now, His Excellency Soludo, the Governor of Anambra State. Then the goalpost was being shifted. Nobody wanted to drive that capitalization process, but Soludo came.
Are you there, sir?
Network. Decided to put a firm deadline. I think that was about December, of minimum 1 billion naira to, as at then, 25 billion. Mind you, before then, Nigeria had several banks, up to 84, 87 banks, that were considered flying carpets compared to their African counterparts. We had 84 banks then, whereby their total capital added together did not equal to the capital of the top 3 or 4 banks in South Africa then. Oh. So it was imperative for banks to merge together. Can you still hear me?
Yes, we can. Go ahead, sir.
All right, so it was very imperative then for Nigerian banks to merge together or fight to get in more investors, sell shares to capitalize properly so that Nigerian banks could rank fairly well among top African banks. And then Nigerian banks too will be able to mobilize enough capital to support lending to the real sector, because banks are important intermediaries between the deficit sector of the economy and the surplus sector. Their major role is to galvanize or put together all the capital in the country instead of being locked down, people keeping their money in their houses and so on. And that's why we're also driving what we call financial inclusion today. Every country in the world, particularly developing countries like in Africa, is trying to drive financial inclusion so that every human being in the country can have easy access to financial services, whether through microfinance banking, commercial banking, payment service banks, or through a fintech banking system, whereby people should no longer keep their monies in pigeonholes in cupboards in their houses or dig holes and all of that, which are like leakages in the economy. But all this money should be put together in one banking system or the other, so that one, central bank will be able to have an idea the amount of money in circulation. It will help them, handle inflationary issues, curtail money supply, and very importantly, all the capital in the country can be mobilized into the banking system, so that those who need money to build new houses, to build their businesses, expand their businesses, bring in raw materials, generally expand the economy, grow productivity, employ labor, and all of that. Finance, agriculture, industry, and trade. All of that is what banks support an economy. So the more robust the banking system is, the more capital or savings banking system pulls together, the more money you have to intervene, to intermediate in the financial system, so that business can get money to grow, and employment can be generated, and GDP can also grow. So capital development in banks or capitalization is critical to ensure that enough funds are put together, not just from investors, but also enabling them open more offices and gather more deposits for the economy to grow.
Mr. Augie,
as a layman, let me ask, what is capital base and how is it relevant to me who is just saving? Is it not a saving house? Who is just putting my funds aside there so I can take it and do something? How is it relevant to the average Nigerian?
How does it affect us?
It's not an investor term as to how big an investment place can be. How is it relevant to the ordinary savings account holder?
All right, okay, let me break it down the way an ordinary Nigerian watching this program can understand it. So that's the essence of communication, that people understand what you're trying to explain. Capital in this case means that the central bank wants owners of banks in Nigeria to put more money on the table. To put more money on the table. That means if you currently have, let's say, only about 20 billion naira, money brought in by owners of the bank to enable them build their infrastructure, develop branches, develop softwares that can enable banking system moves more smoothly. We now want you to, when you have 20 billion or 15 billion, we give you a regional license. You can operate in one region in Nigeria. Now, for you to have that license, please sell more shares, merge with another bank, or whatever you want to do, however you want to do it. Let's ensure that the money you have brought it on the table is minimum of 50 billion if you're a regional bank. If you're a national bank that wants to operate in every part of Nigeria, from Kano to Calabar to Enugu to Lagos to everywhere that you want to operate within Nigeria, national banking license, the money you have put on the table, that's the easiest way I can put it. Like you are working today, but you want to start a business tomorrow. All the money you save together, as you can invest it to start a business. That money is what you call capital or initial capital to start your business. As you start the business, the more profit you make and reserve it, the more capital you have. And the more you sell shares to bring in more investors, the more capital you have. This is different from, money that you collect from customers. So capital in this case means the amount of resources or money that are attributable to the owners of the business. Why is this important? When the owners of business bring more money, they're able to withstand better risk. So a bank failure will be eliminated or minimized or curtailed. So capital helps bank to absorb risk. Capital also helps the owners of the bank to invest more in their business, open more branches, develop safer banking system, financial technology, and so on, so that Nigerian banking experience can be like what you see in developed countries. So capital helps banks to become more competitive and also be more solvent and, of course, liquid, but more important, solvent. That is, for banks to be able to meet their long-term obligations to curtail bank failure. Because the banking system is such that with that amount of capital you bring in, you open your doors and you will see times 10 of that money coming into the banking system. For example, in banking anywhere in the world, a bank that has about 100 billion naira capital, for example, may find itself collecting deposits worth 1 trillion.
Okay, Mr. Augie.
So, and from that 2 trillion,
let's get a few more questions in.
100 billion, you find that they're giving compared to your capital is
Mr.
very
Augie.
small. So by the time you capitalize more, one, you can give more loans, and you can have more capacity to withstand the risk of failure if those loans go bad.
Mr. Augie, can you hear me?
Plans to give out, but it does happen because of business.
Can you hear me, sir? Let's get a few more questions in.
So I wanted to ask about these bank mergers, because I recollect the last time we had bank mergers, many shareholders, the smaller guys in the shareholding industry, had their shares cut into smaller bits. Some people do not even have the education to go and revalidate their shares. Companies like Intercontinental Bank, Oceanic Bank, people were shareholders in those companies, and somehow, there was nothing to write home about where their shares went into. How is the policy different now that if there's need be for banks to merge, how are the shareholders being protected?
Now, we need to, financial knowledge or financial literacy is very scarce in most developing economies, and that's a very important area that government must bring up policy to help people. Anybody who's buying shares in any business must know that those shares make him a business owner. Shares are documents or evidence of allocation of ownership in a company. When you are an ordinary shareholder, you are a risk taker. I want to use that word so you understand, what it means when we say your shares have evaporated and they have no meaning whatsoever, and your money has gone down the drain. It's not government's problem. Now, when you are a risk taker, you have bought shares in a company. Ideally, you are meant to be part of that company's management, but because there are several shareholders, they now appoint amongst them a few to represent them in the board. But what am I saying here? A shareholder is someone who has decided to take a risk in a company. What does this mean? When the company is doing very well, your shares will be going up in value because more people want to come into that company. When your company is not doing very well, it's being poorly managed, your share value is going down. Maybe the par value of the shares is 50 kobo, for example, and you bought 1 million units at 50 kobo. That's 500,000 naira investment. Now, mind you, if the business keeps growing, that your share will keep growing. And when they make money, they give you dividends. Then if the company is being badly managed by whoever you put there as the managing director and his team of management and shareholders, if they run it down, your shares can also crash to zero. What does that mean? That the amount of money you put down to run the business, let's say 1 billion naira as a capital, you have done the business and made losses, incurred losses, booked bad loans, whereby the loans you have booked have now demolished your share value, meaning that you, the owner, you have lost all your money. Your shares have become in your hand. You can't blame government or anybody. You're just a risk taker whose risk has now crystallized. And in fact, if even fraud is alleged on your part, you will be required to sell your personal property to bring more money on the table so that the bank can refund those that they took deposit from. So a shareholder is a risk taker who must monitor the risk he's taking and ensure that the bank is doing well. Go to their AGM meetings and protest if they're not doing well. If they are overspending or running the bank badly, you do that. So anybody who has shares must know that the shares can either grow and become better and earn more dividends, or they can also crash and become irrelevant, just like a piece of paper. So when banks are merging and a bank is not doing very well, they may likely merge on a very weak position, whereby the one taking you over can say that for you to belong to this new brand of business we are forming, bring 10 of your shares, 10 will give you one of this new business, this new bank.
Thank you, Mr. Audrey. Thank you, Mr. Audrey. We have one more question for you before we let you go.
Okay, so do you think this would encourage foreign portfolio investors to invest in the Nigerian commercial papers? What do you think about that?
No, the commercial paper system is a different system altogether.
Okay.
That's a platform where people can invest in instruments issued by blue chip companies, banks or no bank.
Okay.
Dangote, Liver Brothers, BZL can issue commercial papers and people raise money. That will make the financial system robust. But this share capitalization will actually enable people who lost out in the last round of investment in the banking system to now own a piece of a bank in Nigeria today. By buying this share, the bank will start selling very soon. You can now have an ownership in GT Bank, in Zenith Bank, in Access Bank, in all the banks in Nigeria, Fidelity Bank and the rest of them, Keystone Bank and so on. As they sell their shares, you will find that you have opportunity to go in again. Most likely, this share will be sold at a price lower than the current market price of book value as the case may be. So it's an opportunity for local investors and even, very importantly, portfolio investors to come more into Nigeria. And if that happens, you may see more dollars coming into the country for those who want to invest in this bank on a permanent basis, which is a kind of foreign direct investment. So it's a good news but it's going to be some stress on this bank. But I know that, as they've been told, before the end of this month, they'll submit their plans to Central Bank on how they go about this capitalization, which, if it is done, will make our banks more robust, like I said before. They're able to give out more loans to the economy. Yeah. Then hopefully the economy can grow from where it is today to a $1 trillion economy in the next few years, as our president had envisaged.
Thank you so much, Mr. Orji Udemezue, for being on the show and helping us understand this bank recapitalization. Now we are hoping that in a few years after this, even the banks will be able to loan the country money instead of us going cap in hand to other countries to get money. And I hope that the viewers out there also understood what Orji Udemezue gave to us today. And that's all we can take on the show today. We're going to see you again tomorrow. Bye-bye now.
All right.